Welcome back, everybody. We're diving deep into the 2024 tax changes today.
Yeah, using some resources from the IRS.
And the Tax Foundation.
That's right.
And we're going to try to break it down for you,
Exactly.
what it means for the average person.
Yeah, what's most relevant for you?
That's right.
So we're not going to get lost in the weeds with all
Either.
the technical jargon and all that.
So let's get started
Sounds good.
with the standard deduction.
Yeah,
I know that's going up
absolutely.
for 2024.
It is.
I think for single filers, it's going up to...
To $14,600.
Wow, okay.
Married couples filing jointly get a bump to $29,200.
Okay.
And head of household filers looking at $21,900.
I always kind of forget what the standard deduction
Yeah.
does for me.
Yeah, so basically it's a set amount you can subtract from your income before you calculate your taxes.
Okay.
So it basically makes more of your income tax-free.
Got it.
It's especially helpful for people who don't have a lot of itemized deductions, like mortgage interest or big charitable contributions.
Got it.
So
that's always a good thing.
yeah, it's a nice little tax break for most people.
So tax brackets have also been adjusted.
They have been.
Is this something that the average person really needs to be concerned with?
Yeah, even small shifts in the tax brackets can impact how much you owe.
Okay.
Especially with inflation being what it is these days.
I know. Tell me about it.
So all the tax brackets have actually been adjusted upwards for 2024.
Oh, good.
To kind of help offset that impact.
So that dreaded bracket creep that everyone's always talking about.
That's right.
Yeah.
You get a raise,
Right.
think you're making more money, but then inflation eats away at your purchasing power.
Right.
And then you end up in a higher tax bracket.
Right.
It's a sneaky way that taxes go up without it feeling like a tax increase.
Oh, yeah, that's right. Sneaky.
Yeah.
So the top tax rate is 37%. That applies to incomes above.
Above $609,350.
Why?
For single filers.
Okay.
And $731,200 for married couples.
Okay.
So those are kind of the new thresholds
to
keep in mind.
Okay.
But these adjustments are really designed to prevent you from paying more taxes.
Okay.
Just because of inflation.
Right.
Not necessarily to lower your overall tax burden.
Got it.
Okay.
Now, the alternative minimum tax,
Yeah.
or AMT,
The AMT.
as the cool kids like to call it.
Uh-huh.
What's up with that for 2024?
It can be a little bit confusing.
Yeah.
Because it's almost like a parallel tax system.
Oh, gosh.
Like
a whole nother thing.
It runs alongside the regular one.
Yeah.
So in simple terms,
Okay.
you could potentially have to calculate your taxes twice.
Oh, no.
Once under the regular rules and once under these AMT rules.
Yeah.
And then you pay whichever amount is higher.
Oh, my goodness.
So
That sounds like a lot.
yeah, it's not for
So it's like
nothing.
the tax system is playing a game of gotcha with us.
Yeah, kind of.
Yeah.
But it was initially designed to ensure that high-income earners who were utilizing a lot of deductions were still paying their fair share.
Okay.
But it hasn't been adjusted for inflation as much as the regular tax system.
Oh.
So now it impacts a wider range of taxpayers.
Oh, so it's not just for the super rich anymore.
Not necessarily.
Yeah.
It can affect people with certain types of income or deductions,
Okay.
even if their income isn't exceptionally high.
So for 2024,
Yeah.
the AMT exemption amount is $85,700
For single filers.
for single filers.
And $133,300 for married couples filing jointly.
Okay.
So,
That's good to know.
yeah.
But I guess knowing whether or not you actually need to worry about it
Right.
is a whole other beast.
Exactly.
Okay.
There are some red flags to watch out for,
Okay.
which we'll be diving into later.
Okay, great. But yeah, AMT is something to be aware of.
Yeah, just be aware.
Especially if you have a complex tax situation.
Yeah.
Got it.
Okay.
All right, let's move on to something more cheerful,
Yeah.
like tax credits.
Okay.
There's two that always seem to be in the news.
Oh.
The Earned Income Tax Credit,
Yeah.
EITC,
Yeah.
and the Child Tax Credit.
Yes.
What's happening with those for 2024?
So both of these credits are really designed to provide tax relief and financial support
Okay,
to working families and those with lower incomes.
great.
So for 2024, the maximum EITC amount for families with 3 or more children is $7,830.
Wow, that's pretty good.
Yeah.
Okay.
And while the child tax credit remains at $2,000 per qualifying child,
Okay.
the refundable portion of that is actually increasing,
Oh, that's good.
which means that more families could potentially get money back
Okay.
even if they don't owe any taxes.
Oh, wow, that's really helpful.
Yeah.
So how do those credits actually work?
So the EITC is a refundable credit.
Okay.
It's calculated based on your earned income and family size. So it can reduce your tax liability and potentially give you a refund.
Got it.
The child tax credit helps offset the cost of raising children.
Okay.
And it's partially refundable.
Okay.
So even if you don't owe any taxes, you might still get some money back.
Got it. So both of those credits are really there to
they're designed to give
families some relief.
Yeah, financial relief.
Awesome. Okay. Let's quickly touch on the gift tax exclusion.
Yeah.
Any changes there?
So there is a slight increase in the annual gift tax exclusion, which is the amount you can give to someone else without triggering a gift tax.
Right.
That's going up to $18,000 per recipient.
Oh, okay.
It's a small change, but it could make a difference for those who are planning to give larger gifts.
Okay, so we covered the standard deduction boost, the tax bracket adjustments, the ever-present AMT.
Yeah, the AMT always lurking.
Yeah, and some valuable tax credits.
Some good ones.
That's a lot to digest.
It is. We've only just scratched the surface. There's a lot more to explore, and we'll be diving into some other key changes and strategies in the next part of our deep dive.
All right, so stay tuned.
Yes.
We'll be right back to talk about some potential pitfalls to avoid.
Yes.
And some smart strategies to help you maximize your tax savings.
That's right.
In 2024.
Yes. Welcome back. Let's delve deeper into some of those potential tax pitfalls we touched on earlier, starting with the AMT.
Oh, yes, the AMT.
Yeah, we know it can be a bit of a headache.
Yeah, it's like this shadow tax system lurking in the background.
Right.
Waiting to trip you up.
Exactly.
You mentioned some red flags.
Yes.
What are those exactly?
So one of the biggest red flags for the AMT is having a high state and local tax burden.
Oh.
You remember we talked about the SALTA deduction being capped at $10,000 a few years back?
Yeah.
Well, that can actually push some taxpayers into AMT territory.
So if I live in a state with high income or property taxes, AMT is something I need to be aware of.
Yes, precisely.
All right.
Other things that can trigger the AMT include exercising incentive stock options or having a large family.
Interesting.
The more dependents you claim, the faster your AMT exemption phases out.
So it's not just about income level.
Yeah.
It's a combination of factors.
Exactly. It's a combination of things. And while we can't give specific advice in this deep dive, it's definitely worth exploring further if any of these red flags apply to you.
Good to know. Okay, let's switch gears and talk about a deduction that's particularly relevant for business owners.
Right.
The Qualified Business Income Deduction, or Section 999A.
999A.
What's the rundown on that?
So this is a fantastic deduction for those who own pass-through businesses, which means that the business income is reported on your personal tax return. Think sole proprietorships, partnerships, S corporations, some trusts and estates.
Got it.
Section 199A allows those business owners to deduct up to 20% of their qualified business income.
So a nice little tax break.
Right.
For entrepreneurs and small business owners.
Absolutely.
Awesome.
It's designed to provide tax relief and encourage business growth.
Right.
However, there are some limitations to keep in mind. For 2024, the deduction starts phasing out for taxpayers. With taxable incomes above $191,950 for single filers. And $393,900 for those filing jointly.
So even if you're eligible, the amount you can deduct might be limited?
It could be limited, yeah.
Depending on your income.
Depending on how much you make, exactly. And the rules surrounding qualified business income can be complex, so it's always a good idea to dig a little deeper into those specifics if it applies to you.
Okay, now let's shift gears again and talk about something many people find a bit confusing. Capital gains taxes.
Ah, yes, capital gains.
Yes.
This is all about the profit you make from selling certain assets, like stocks, bonds, or real estate. It's an important concept for anyone who invests.
Right.
So
if I sell some stock that I've been holding for a while and I make a profit, that's when capital gains.
That's when it comes into play.
Taxes come into play.
Yes. And the key here is how long you've held that asset.
Okay.
So if you sell an asset you've held for 1 year or less,
Okay.
that's considered a short-term capital gain.
Okay.
And it's taxed at your ordinary income tax rate.
Okay, so short-term gains are treated just like regular income.
Exactly.
Okay, what about investments I've held for longer?
Now that's where things get a little more interesting.
Okay.
Long-term capital gains.
Okay.
Which are from assets held for more than a year.
Okay.
Those are typically taxed at more favorable rates.
Oh, really?
Often lower than your ordinary income tax rates.
Interesting. So holding on to investments for the long haul could potentially save me money on taxes.
Exactly. That's the idea.
Okay.
There are different tax brackets for long-term capital gains.
Right.
And the rates can vary depending on your income level.
Of course.
But the general idea is that the longer you hold an investment, the less tax you'll potentially pay when you sell it.
Got it.
For a profit.
Okay. That makes sense.
Yeah.
Now, I know there are a lot of details and specifics.
There are.
When it comes to capital gains taxes.
Yeah. We can't cover it all here.
Right. But hopefully this gives our listeners...
Right. This is just the basics.
A good starting point.
Yeah.
For understanding the basics.
Exactly.
All right. So...
And remember, tax laws are always evolving.
I know, right?
So it's best to stay updated.
Right.
And maybe seek professional advice.
Yeah.
If you have specific questions about your own investments. Great point. All right. So it seems like we've covered a lot of ground.
We have.
In this part of our deep dive.
Yeah.
From AMT red flags to the benefits of the qualified business income deduction.
Right.
And the nuances of capital gains taxes.
Exactly.
What's next on our agenda? We've covered a lot so far in this deep dive. We have into 2024 tax changes.
Yeah, a lot of information.
But I'm sure our listeners are wondering where they can go to learn more about all this.
The IRS website is always a good place to start.
Of course.
It's not always the easiest to navigate.
No, it's not.
But it is the official source for all things tax related.
Okay.
You can find publications, FAQs, even some interactive tools there that can help you understand the rules and regulations.
Okay, good. And are there any other resources that you recommend?
Absolutely. Organizations like the Tax Foundation, whose research we've referenced in this deep dive, provide excellent analysis and insights into tax policy. Okay. They have articles, reports, even podcasts that break down complex issues in a way that's pretty easy to understand.
Okay, great. And of course, we can't forget about the value of a good tax professional.
Oh, absolutely.
Right. Especially when things get complicated.
Yeah. A qualified tax advisor can really help you navigate the intricacies of the tax code.
Right.
Especially if your financial situation is complex. They can help you identify potential savings opportunities.
Okay.
And ensure you're filing correctly.
Right.
Taking advantage of every deduction and credit you're eligible for.
It sounds like having a trusted tax pro on your side can really make a difference.
Absolutely.
Especially with all these changes coming up.
Think of it as an investment in your financial peace of mind.
I like that.
Yeah.
Okay, so as we wrap up this deep dive, is there anything else our listeners should keep in mind as they prepare for the 2024 tax season?
Yeah. Taxes can seem overwhelming.
Yeah. But knowledge is power.
Right.
Remember, these changes, even the small ones, can have a ripple effect on your overall tax liability.
Oh, yeah, that's a good point.
So stay informed.
Yeah.
Be proactive.
Okay.
And don't be afraid to seek help when you need it.
I love that. All right. Well, that seems like a good place to wrap up our deep dive.
Our deep dive.
Into the 2024 tax landscape.
Yeah.
We hope this is giving you a better understanding of what's coming and how to prepare.
That's right.
We encourage you to explore the resources.
Yes, check out those resources.
Linked in the episode description.
That's right.
Dig deeper into the areas that are most relevant to your situation.
Absolutely.
And approach tax season with confidence.
That's right.
And remember, while taxes can be complex, they also play a vital role in funding essential services.
That's right.
And programs that benefit us all.
It's true.
So let's embrace tax season as an opportunity to understand our financial obligations.
And contribute to the well-being of our communities.
I love that.
Right.
That's a great way to look at it.
All right, so until next time, stay curious.
Keep learning.
Keep learning, and happy filing.
Happy filing, everyone.